welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks buzzing in trade. I am Agam Vakil. Let's get in our experts for today. We have Kalra of Target Investing, Foram Parekh of Indiabulls Ventures, and Vinit Bolinjkar of Ventura Securities. Welcome to all of you for joining us on the show. Today on Hot Money, we will discuss the oil marketing companies which have posted a mixed bag of earnings on the back of crude price volatility. So what are the OMCs worth, and are they also worth accumulating at current levels? We also talk about Yes Bank's decision of launching the QIP issue amid the need for capital, and what should investors do when it comes to Yes Bank now. Ujjivan reported a strong quarter on the back of higher disbursements. However, the bigger question here is, how will the listing of small finance bank affect Ujjivan's value and investor interest? And lastly, we talk about Motherson Sumi that has reported a disappointing quarter with a 42% year-on-year decline in consolidated profits. We talk about all of these with our analysts and what can be done next with this one. Well, on that note, let's start off with the OMCs. And again, as we have been talking about, a relatively volatile period for crude. But OMCs, of course, today are, of course, advancing in trade, so we don't have too much to go for there. But on the whole, I open this discussion up. And Vinit, I'll start with you. Your view here, where do these OMCs stand?
So I think although they are cheap on valuations, the GRMs are declining very drastically. So in my views, these stocks are a avoid. Okay. I don't see much growth coming. They do have a lot of throughput coming in, capacities are coming up in IOC and HPCL. But to my mind, I would not be investing in this space.
Okay, all right. So, not investing in this space for now. Foram, what about you? How are you placed here?
I would also not play this theme because if we see there are a lot of volatility on account of the crude prices, and that is of course going to impact on the GRMs, which we did see that there was a huge inventory loss which did catch up on the GRMs.
Okay.
Also the results have not come nice, and it was very much expected, but I think the inventory loss was not expected. So and that's purely on account of the crude price volatility. So if we want to play the crude factor, then I would want to switch to aviation sector or the paints, right, over the OMCs, because there we know that the demand is certain and it is growing. And now with regards to aviation, there are just two players from the listed space. Hence, we are seeing a huge, exponential growth in terms of revenue, market share, and profitability.
Okay.
So I feel that one should completely avoid the OMCs counter if you want to look from the crude perspective and switch to aviation counter.
Okay, Samir, do you agree or do you have something different to say?
So I have similar, I'll go more on extreme that I think these are places where you can short these OMCs.
Yeah.
Because valuation, if you take it into account, are two factors. One is the GRM still has a scope to improve, which it's not, because given the global slowdown, the GRMs on Singapore basis is also going down, and the premiums to those GRMs is going out of the system for HPCL, BPCL and IOC.
Right.
Secondly, they are into that phase of BS6 transition. So a lot of cash on their books is being used for the capex purpose as well.
All right.
So I think for them, the next 6-9 months will be very difficult to even come clean on the balance sheet.
Right.
And that's where the stress becomes even worse for them to reverse on.
Sure.
So I think the GRM slide down and the cash flow, free cash flow going down as well. Then you have a difficult problem coming up. So I think it's better to, if it gives you 10% upside kind of a bounces, you can short it out.
All right. For Vinit, for you, is it more about philosophy, as in you just don't want to, look into these government-owned OMCs, or is it more to do with the current situation? My point is there anything that may lead you to change your view? In that case, what would it be?
So I think the GRM trend has to pick up, which it is not. So it was 4.7 few weeks back. Today it is 3.2, the Singapore GRMs. So, you are going to see pressure coming in. Now, there was a reason, excuse that, because of the elections, they couldn't pass on the prices. Now they can. But I don't think that will happen because of this factor. And second is that the BS6 would need to be launched at a higher price. Again, the demand would get impacted.
Okay.
So I believe that there will be a kind of I would take a pause on this and not look at this space at all. But the valuations are too cheap, so for me, shorting at these prices doesn't make sense.
Okay. All right. Fair enough. So there you have it, guys. We have a consensus as far as OMCs are concerned. All our experts on the panel are avoiding OMCs for now, certainly, and they would want to prefer. They would prefer looking at a change in variables, certain change in variables, and well, at least one of our experts on the panel is actually would look to go short on this one. So that's as far as OMCs are concerned. Let's move in and talk about Yes Bank. Now, Yes Bank, as we all know, from last year and what we have seen so far at this point in time, there's been a considerable decay in the value of the stock, the market capitalization. There is an erosion of value overall, and it's down by as much as 79% on a 12-month basis, and it continues to decline. It's currently lower by another 4% in today's day of trade as well. Of course, there were a lot of factors which came into play after Ravneet Gill, who is the new CEO, came up and announced the first earnings, but that just wasn't it. There were a lot of other factors that played against Yes Bank at this point in time. At 78.6, Foram, we've seen quite a degradation on Yes Bank. What would you do with this one now?
I would leave the stock aside because now there are no positive factors at all. We were only waiting for QIP, and I think QIP is also at some 83 to 84 rupees.
Yeah.
So there's not much premium left in the QIP also. Though it would get subscribed, but then there's no premium. So I think the only silver lining at the moment was the QIP, and now that is also not there. So now with regards to the earnings, I think the management, Mr. Ravneet Gill, is doing all the right things by cleaning up the balance sheet, and he took a hit in the first quarter of his earnings, and but I feel there is still risk in the company because its exposure to BBB rated assets are still high, and it would definitely weigh on the stock, and it's definitely weighing on the stock right now. So I think let the stock and the bank get settled down with all the dust. We have seen a steep correction in the market, and we have also seen many companies, many banks reporting very good set of numbers, and I feel that there is a comfort right now because the market on a broader indices is really fragile. We have a lot of macro news both in India and globally, very fragile. So I think one should definitely stick to good earnings and good quality large cap stocks, which are there even in this kind of a scenario. So let the bank settle down with its own set of earnings, and let the clearance be there. We have seen Axis, ICICI both took good 2 years for settling down, and now they're coming with good set of numbers. So we need to give this time to Yes Bank also. So let it take its own time, and we can switch to other banks till then.
Okay. Samir, are you pricing in any more risks in Yes Bank at these levels?
See, the larger accounts have been there in past couple of quarters. This quarter, if you manage to see, there are no further financial downgrades which have come up, which can stress Yes Bank or other banks' books as of now. So if it comes by the September end where the quarter closes in, then it's another story. So I'm looking for maybe a Q2 numbers much more closely. QIP was something which everyone knew will come through, and the only point is how much subscription they get is eventually the second trigger of that. It's more important. Now, fully subscription can be most likely the scenario, but is it oversubscribed and by how much, if that the situation is. So I think these two things are there. So I would hold on to the position which I have. I won't liquidate at these prices because I've taken a major hit. Now the second is look towards the Q2 results and the QIP closure, and then see how the trend goes.
Okay, all right. Vinit, where do you stand on Yes Bank?
So I think I've been bearish for quite some time now. It's been almost 1.5 years. Continue to remain bearish. I feel that the bank is starved of growth capital. Even if this money comes in, it will just go to kind of, help them meet RBI norms.
Right.
But if you grow, to grow, you need growth capital, which is not there. So you need another tranche of fund injection coming through. Now, if you contrast it with ICICI and Axis, they both ICICI did not need any funds, and Axis got the funds at the right time. So here, I think because they delayed on keeping everything under the carpet, and that has worked to their disadvantage.
Absolutely, yeah.
So I think that this is a no-show, and I would avoid this stock completely.
Okay, all right. Sameer, how would you respond to that? Maybe a requirement of further liquidity because there's only so much the QIP can do.
So I think, see, this will be the first QIP they do. They'll try to see because if they do the whole required, which is around 1.2, 1.3 billion, if they do it right now, the dilution is way a lot. So I think let the QIP come in first tranche. That's why I'm saying hold on to it. Don't make a fresh entry right now. See the QIP subscription data, see the Q2 results, and then decide to whether you want to stay put and keep on holding or add over there.
Okay. And is there anything what would make you liquidate your position in Yes Bank?
See, the only thing is if it goes to bust situation. Now, because the only point is if it's not able to revive from here, the only next situation is it goes into the liquidation part of the system. And if that goes, then the whole market has its own systematic risk coming up.
Okay, all right, fair enough. So there you have it, guys. Again, well, a beleaguered stock, as we all know, and well, there is a lot of caution, which all our experts are suggesting, even at these levels, even after the kind of correction that you have seen in Yes Bank. Let's move on and talk about Ujjivan Financial Services. Now, again, this is one of those stocks which have seen spurts of up moves in the last few months as well, but that hasn't saved it from volatility. Now, of course, there is the aspect of growing competition in the space, as well as valuations every time we see a spurt. Now, even if you consider the way things have panned out for this one, last 12 months we've seen a decline of around 16%, but on a 9-month basis it's actually advanced by 38%, which is what I meant was that it is fairly volatile in terms of the range with which it tends to move. So let me open this up as well. Sameer, I'll come back to you on Ujjivan Financial. What's your view here?
So I think, see, these two stocks, Ujjivan and Equities, was always the game players for micro-financing. And that cycle, I think, on the money-making system is kind of peaked out, or at least for the shorter term, peaked out. Because if you see the dispersals, if you see the NPA recognition, the stress, that's coming up even faster than what is anticipated.
Right.
There might be certain quarters. So what happens, 2 quarters, they show a nice picture on the provisioning and the asset quality. And the 3rd quarter, they take the whole hit.
Right.
So that's the trend, and that's where the bounces and the volatility is too high in the stock.
Sure.
Once the small finance bank is listed, I have nothing to add on at a Ujjivan holding end. There's no other business which I get exposed to. I think then the investor will lose interest and the value of the stock goes drastically down, even as they start planning the IPO.
Right. Okay, Vinit, what about you?
So I think these floods which have occurred across the country, I think they could be devastating for these microfinance lenders. So I would avoid this stock.
All right, but it's only because of that in the near term, you're suggesting?
In the near term, I think that is the stress which is not captured in price.
All right.
So, we've had entire Western India. We've had Tamil Nadu, which are all the progressive states.
Yes.
We've had Assam. So, I think there is a lot of stress going to build up because the damage has been unforeseen. So, we went from a drought situation to a flood situation. So, no one was really prepared. So, I think the loss to that segment is going to be rather large. So I would kind of avoid this stock.
Okay, Foram, where do you stand here?
I would go and buy the stock because of course there are floods and these kind of situations, but I think on a valuation front it's quite attractive. And if we look at the Q1 earnings that it has reported, on every parameter it has stood very tall and numbers have grown exponentially. The profit has grown 2 times, and even on the disbursement and the gross advance levels, and at every parameter it's come very nice. So I feel all the listing of the holding companies and other SFBs would be somewhere in the month month of Jan 2020.
Yeah.
So the kind of beating that the stock has taken till now, I think it augurs a very good buy, because till Jan, you have a safe cushion in the stocks, and that is why I think it's a good place to hide, and one can definitely make money until the new ones are listed.
Okay, sure, Foram. But my question then is that if we do see some of these aspects when it comes to floods play out against some of these microfinance companies, would you not think it would be a little prudent to wait for a quarter or two before you delve into something like an Ujjivan Financial Services, or that you're pretty sorted with this one?
No, it would definitely take a hit, but to what extent does it take a hit, we are still not very sorted.
Yeah.
And probably we have seen last year also when the floods did take place, in the southern regions. You look at the Federal Bank, City Union Bank, they were not really impacted, in the loan book and all.
Yeah.
So definitely it would get impacted, but not to such massive levels that I would want to lose these stocks at attractive, valuations.
Okay.
So probably at these levels, I think it augurs a good buy.
Okay. Vinit, on an immediate basis, what are those factors that you may want to see when it comes to the flood situation, which may convince you, okay, the situation is not that bad, and hence, things for Ujjivan may not be that disappointing?
So, actually it's a blinder. If you see the TV shows, it's a blinder that no one is spared.
Yeah.
Right? And to recoup your own personal belongings and to take care of everything is a little difficult.
Yeah.
But even if I were to look at it optimistically, I would want to see the persistency ratio.
Right.
So, how good are the collections coming through?
Sure.
Are they 95% plus?
Yeah.
So if they're not 95% plus, their valuations will take a hit.
Okay, all right, there you have it, guys. We have a relatively mixed view on Ujjivan Financial Services, but whatever caution there is, that's largely to do with the near-term challenges that the company may face owing to floods. But we'll move on to the final stock of the day, and that's Motherson Sumi. Now, while it has continued to see a 14% growth on the top line, it continues to see a decline when it comes to profitability. This time around, again, profits have taken a hit with margins coming off. Now, the management seems to suggest that for them, top line is not as important as profitability, and yet, quarter after quarter over the last couple of years, what we have seen is that while top line growth remains steady, we continue to see that contraction in profitability, and thereby putting a hit when it comes to its earnings per share. So let's discuss this one as well. And we do know that Motherson Sumi has also seen a significant deterioration when it comes to the value out there. It's down 66-67% in the last 12 months. Vinit, where do you stand here?
So this is another stock. I think we are discussing this for the third or fourth time.
Yeah.
So right from 250 onwards, we've been bearish, and it's around 110 it looked like okay, but another result and it's down. So debt is a concern. You got close to 11,500 crores of debt. Valuations are very high, and growth is just not there. So you've done a lot of leverage buyouts. Now with the growth when you don't have the growth, you're going to have the debt come to pinch you.
Right.
So for me, it's a classic debt trap. I would avoid the stock.
Okay, all right, fair enough. Foram, where do you stand?
I would also completely avoid this stock, and I've been recommending to avoid since a very long time. So if we see, as you rightly mentioned, quarter after quarter, the company is not delivering on the bottom line.
Yeah.
And if we see even its other companies in the Eurozone, there also, if we see, apart from the revenue, EBITDA margin, PAT, all are taking a hit. So even at a group level, at a standalone point, everywhere it is taking a hit continuously. And of course, the downfall of the auto sector is to be blamed for this, and we expect this kind of downfall in the auto sector to be continuing even in the near term, and that's going to be across the globe. So even the next quarter is going to be the same for Motherson Sumi. We do not see any sort of revival that would lift the profitability up, and of course only thing that is rising is the debt in this company. So I would completely avoid this stock even at current levels.
Okay, avoid for at least two of our experts. Samir, do you have a contrarian view, or you would agree?
So see, it's not just happening to Motherson. If you see Bharat Forge, if you see all the auto-related, especially export-related auto stocks, it's happening all over. Because if you see global numbers, 25% down, country-wise sales are down.
Right.
So that is a big number. So you're in an auto industry recession globally, let's say, in that certain sense. Now over here, the numbers are bad. It's not a place to buy in because it's still a lot of scope for a downside to come off before it gets better. The leverage which they have because of the buyouts and the working capital issues, that is playing the part on the balance sheet as well now.
Right.
And that is the main point for them. So this can really either because of the industry slowdown can really impact Motherson in a very different way. What maybe 6 months back or 12 months back, no one expected Motherson to be in such a situation.
Right.
So I think it's not a bad stock, but it's in a bad environment and a bad place with a leveraged balance sheet. So it can turn out to be ugly before it gets better. So avoid it.
Okay. All right. So Foram, you said that you would avoid it, but would you sell? Because in terms of valuations, it's come down from 40 odd times to now it's 20 times. It's still relatively expensive considering the fundamentals that the company has. But would you ask our clients to sell Motherson Sumi if they held on to this one?
Yeah, I would tell them to book the loss and switch it on to other companies. Because if we see, if we would avoid the entire auto ank because the entire auto sector is going to go under a slowdown even for next 6 months.
Sure.
So auto ank is a complete avoid even at current juncture. People who have not sold it can definitely do the fresh selling right now. Because if we see, I think from the entire automobile space, only Bajaj Auto is the one which is doing very good. It is capturing the market share in all its two-wheelers, three-wheelers, even in this kind of a slowdown.
Right.
So when the sector comes up, obviously we know that once we have performed in bad times, will continue to perform in good times. So we have some good stocks available at good attractive valuations.
Sure.
So one can definitely book losses and switch to the good stocks which are still available at attractive valuations.
Okay, fair enough. There you have it, guys. Well, that's the view on Motherson Sumi, and again, not very encouraging. That's largely on account of the kind of earnings that we have seen. Well, with that, I would like to take a moment to thank all our experts for joining us and taking the time out. That's Vinit, Foram, and Samir. But don't go anywhere. Ask PQ is up next. Stay tuned to Bloomberg Quint. We'll keep bringing you more.